Eric Muadith, Muadith.com. It is March 15th, 2016. Let's take a look at markets here. We have about 4 hours to go before the market close. Let's take a look at things here and let me show you where some of the commodities are trading. Live action here, we are looking at gold, which is slightly down. So gold down about $12.70, and we see that crude oil is down about $1. So that's some of the live trading there for the futures. Let's go to the NASDAQ weekly chart and begin there. And okay, so on the NASDAQ weekly, let's keep watching and pay attention to how this develops, because if we continue being rejected here with the uniform activity, that's not a good sign. So just keep that in mind. Let's take a look at the NASDAQ daily, and you can clearly see that we were watching for this to become resistance, and right now we are looking at what is clearly right now double top rejection on that line, suggesting that at this rate we are more and more setting up for a lower move. If we take a look at the Dow weekly, right now you can see what it's doing here is trying to decide whether it has enough energy to move above the recent top side resistance line. You can just draw it like that. I guess we can go back here. So doing its best to decide whether it can move above this line. That's clear to see. Also, there's another way of looking at this, which is the previous break, and we've been talking about this for the last couple of weeks. This was the break coming off these highs there late November, and what the market is doing is coming back to test that break line. We haven't been unable to move above that as of right now. We take a look at the Dow on the hourly, and what we have here is still, we have the market's moving higher, a little bit higher on the hourly, but you can see that the RSI never really did move to new highs, so that set the stage here for a shallow pullback. And also we can see that on the way down we have this support line, so we are stuck within a range. On the top side there's resistance, on the bottom side market's been finding support on this line, and maybe this is gonna take a while to resolve. Those hourly charts do seem to indicate that there's market's gonna have to decide whether it wants to eventually get out of this with a move higher by moving above that resistance line on the top side, or if it breaks down and we see a move lower if it breaks below the support line on the hourly. So maybe this might take time to digest and to resolve. We take a look at the Dow Transports on the weekly, and let's keep watching this, because if this happens to be uniform activity rejection, just like it was here, uniform activity rejection at the 50 line, that might set the stage for a move lower. Right now it is shaping up, looks like and feels like it is uniform action rejection on this line, and at this rate one should not be too surprised if the market starts pulling back and pulling back significantly, because as we move below 50, if and when we move below 50 on the weekly time frame, expect a big down move. Take a look at the S&P 500. Here we can see that what could be uniform activity, some type of a dome type formation, and back below 50. If it does move below 50, that's going to be confirmation that the next meaningful swing trade is down. And we can also see that we've come back to challenge the top side of this weekly RSI. If it's a big if, because we don't know, so we always have to leave room for the market to do whatever it wants. So if the market can't move above that resistance line on the weekly, then clearly the interpretation there is that the next swing trade that is going to be meaningful is for markets to move lower. I'd like to take a look at commodities here. Take a look at the GLD. Right now, problem here is we are trading back below the recent breakout. So even as of right now, it looks like that breakout above 118.36 is stalling. As long as the GLD is below that price, and as long as gold itself is trading below 1238.50, for the gold index proper. Anything, and right now it's trading at 1237, so the gold breakout is failing. And the GLD, if it continues holding below 118.36, that is confirmation pretty much that we are looking at a market that is very easily, or could very easily, see much lower prices. Keep in mind that here we are seeing uniform activity rejection as the ETF, gold ETF, has tried to move above 69.1 twice and seems to have failed. If we take a look at the GLD on a daily chart, we can see that really what was going on over the last couple of weeks was gold making slight higher highs in price, but the RSI did not follow through. So that declining strength on the technicals could actually be the reason why we are seeing this pullback. Now, one thing I want to point out here is, watch here. If gold does slip and move below daily RSI 50, expect a big down day in the commodity. So watch the 50 level here. Any move below 50 would suggest that there's a big down day somewhere around the corner, and it could be setting the stage for a pullback if and when it moves below the 50 level on the daily RSI. We take a look at GDX, the gold mining ETF, and here we haven't broken through the recent breakout level. So right now we can say that GDX is doing its best to hold above the previous breakout level. For the GDX, the level to watch is 18.84. It needs to stay above that. If it stays and holds above that, then we give it the benefit of the doubt. But if it cracks back below that, then that's going to be confirmation that this is really now becoming an obvious market to be on the lookout for lower prices. Take a look at the daily. The daily here is trading at 54. Just watch out, because at some point, if it cracks below 50, big if, expect a big down day. We take a look at the SLV, a silver ETF, which even this week was doing its best to break out above 14.99, which is the recent weekly closing high, but we were rejected. All right, the high for the week is 1404, and you can see clearly here that this is where we were expecting the stock to struggle. In fact, if we go back, let's go back about 5 years on the weekly, it was right now very consistent with where the stock has run into trouble over the last couple of years, and so one has to respect the potential for lower prices. You can see that red line has been a problem, and right now we've hit that twice, and the more we confirm this as resistance, the more that this is going to be a problem, the more it could actually even eventually go on to challenge recent lows. Take a look at the daily, and we see here that the SLV is also coming close to 50. On the day it moves below 50, expect a big down day. Next, let's take a look at USO. And it's important to note here that even with the recovery in crude oil, the USO continues to trade below 30.9, which is just an area where stocks don't trade well. Take a look at the weekly. As we had discussed over the last couple of, days and weeks, we've come back to challenge the break. So there was a break here in late 14 of the highs there. So we've come back to challenge that problematic spot on the chart. Every time we move below that, like we did here, coinciding with the red line, we drop. We resisted here for the highs there, came close there for the highs there, and then again here. That's why personally I've been leaning towards resistance on this instrument based on this weekly chart and where the monthly has been trading. We take a look at the daily, and we see that the daily right now had come back to challenge the top side of this red line, which has been a problem since May of last year. Every time we hit that, we pull back. Double top there, we pull back, and this to me also looks like a double top rejection, if not a triple top here, and again right there. So triple top means it's triple important. It will not surprise me that we eventually move lower, maybe even crude oil makes fresh lows. That would be my prediction for now. All right, now I want to go back to the monthly charts for the GLD because I want to show you the big picture. The big picture here, in my opinion, is we moved above 50 in the past month for a very strong move in February and early beginning of this month. But I think if we go on to show rejection at the 50 line on the monthly, suggesting that once we move, if and when we move below 50, so of course it's a big if, but if we do move below 50 on the monthly RSI, expect a big down month whenever that happens. In other words, it is going to be pretty much of the magnitude of the move higher in the past month. So I would expect a big move lower in terms of the GLD if it cannot hold above 50 on its monthly RSI. Same thing can be said about the GDX on the monthly. As you can see right now, it is already showing signs of being rejected at the 50 level on its monthly RSI. That's a big deal, guys. And so we see here also that if we take this line on the monthly, which broke down in 2012, so of the 2012 somewhere here, we can draw a line from there. So that's one way of drawing it. Let me go to the most recent line. So let me bear with me here. I think there's another line that we've been discussing, which is this break actually of coming into 2012, so off the highs there. And so we draw a line around the 50, just slightly below the 50, and it will be somewhere there. We had uniform activity rejection and also rejection on the red line and the 50 level for the highs there. And right now in front of us is another uniform activity rejection around the 50 level and also rejection on the red line. Clearly one has to look at this and assume at this rate more and more we are looking at markets that want to pull back in terms of the gold mining sector. Okay, let's take a look at some ideas for those of you who trade options. We begin by taking a look at some stocks that I believe are poised to go lower. Take a look at KMI here, coming back to test recent problematic spot on its chart after this break. So the stock to me right now looks like it is currently a short at current levels. It's coming back, and as of right now we are seeing first signs of rejection with uniform activity, suggesting that here one can expect lower prices and probably even go on to challenge, if not break, to fresh lows. All right, so take a look at KMI there. And of course all of these ideas should come with stops. We can never really be too arrogant to assume that we cannot be wrong. Here we see another break point on the weekly. Clearly draw a line from there. Again, another chart showing uniform activity rejection. The last time we had uniform activity rejection was here. We went to fresh lows after spending many weeks below 30.9. Here we've spent many weeks below 30.9 and we are coming back and showing uniform activity rejection on that line. One can assume here more than likely we might have to make fresh lows. We take a look at the daily here. In fact, let's go to the daily. Oh, by the way, one thing I need to point out here is this could easily move back below 30.9. If and when it moves below 30.9, expect lower prices. In fact, take a look at KMI on its monthly, and here this one is really bearish. It has tried to move, but it is still trading below 30.9 on its monthly chart. So this is absolutely bearish. One should expect lower prices, fresh lows at some point, in my opinion. And so let's go back to that MRO chart and take a look here at the daily. The daily coming back to test the break. It doesn't get any more classic, or as classic as it gets is the break there, brought the stock off the highs. We draw a line from there, and every time we hit that line and move back below it with uniform action, it's a sell signal. Sell signal here for the highs there. We touch the line with uniform activity there for the highs there, and right now the market has done this. You didn't do this, I did not do this. So this is double top rejection. We have to assume the market is telling us for now, unless it can clear that red line, that the next swing trade is lower. We take a look at FCX, and here we can see that the weekly is coming back to test the previous recent break point. Clearly, if one was to be objective and neutral here, with uniform activity rejection there for the highs there, we are coming and showing uniform activity rejection for the highs there, suggesting that we might see lower prices at this rate. Unless the stock can figure out how to move above the red line, one can expect lower prices. Keep in mind, you want to be in the trade before it moves below 50, because on the month, on the week it moves below 50. Expect a big down week, and you want to be part of that wash down if it continues trading below the red line. Take a look at another one, ETE. Here, just want to show you that it is now back below 30.9 on its weekly, suggesting that if it continues holding below 30.9, chances are, having moved above 30.9, moving from $4 at the lows here to the highs of about $8.50 or so, I would speculate that if the weekly RSI continues holding below 30.9, one can expect this stock to be trading below $4 in the coming months. On the monthly, you can see why I'm bearish is because in spite and despite the move recently, you can see that the stock's monthly RSI continues trading below 30.9. Let's take a look at one more, and all of them that were moving recently, they all have the same look and feel. So really, one can pick whichever they like. But here we can see that on the weekly, RSI just a line connecting RSI highs. I think we discussed this previously. Here coming and hitting that line. I think at this rate, the stock having moved, recently from the, about $17, $18 all the way to $25. I think eventually at this rate, with this line showing rejection, as long as this line is showing rejection, one can expect lower prices. Now, for those of you who don't trade options, take a look at the following ETFs. The first one is SCO, and here we are seeing that it is reclaiming the 50 RSI level with uniform action. The last time it did that was here for this lows. So you can buy this with a 5% stop. That's the simple way to look at this. And also, there's another line connecting RSI lows. As you can see, it has come back and is now showing showing support on this same line. So if crude oil is to go lower, this is one way you can play the crude oil market, by owning SCO. As it comes back, for now it is holding this line, and of course you can set a 5% stop. The other stock that you can take a look at is DUG, and here I want to take a look at the daily. The daily is coming back and showing nice support on this line. Why this line? Because it began this nice move from here and was support here at the lows, and again coming back and showing double bottom support here. So if this is to trade well, it's going to begin from around current prices. You can own this and set a 5% stop for now and ask questions later. Let's take a look at 3 gold stocks. But if gold is going to go lower, all of these are short ideas in my opinion. And we can take a look at the monthly charts, and you can see here AEM could be a short and at current levels, just because we are coming back and testing problematic spot on its monthly chart. Rejection here for the highs, uniform activity rejection here for the off the highs there. So coming back in 2015, if we cannot move above this level, it suggests that this is where you want to go short the stock, ask questions later. Of course, you always want to make sure you have stops on all of these ideas. Take a look at gold, the gold stock here coming back since the break. Since this break here, you can draw a line from there. Let's make that red, signifying sell signal. Here we can see that the stock has struggled previously to hold above the red line for the actual highs there, uniform activity rejection for the highs, and now coming back around that level. At this rate, one can assume that the monthly chart, if it cannot move above the red line, big if it is continuing to be down for the month, that the next swing trade is gonna be lower and meaningfully lower. Let's take a look at one more, AU. And remember, this pretty much is for all the gold stocks that were moving higher recently. Here we see that we are coming back to challenge this break around the 50, which broke off 2012, and we've been lower since. Draw a line from there, which also happens to be around monthly RSI 50. As we continue to show rejection here, and especially if the monthly RSI moves below 50, expect a big down month, just like we had a big down month, or just like we had a big up and strong month when we moved above 50. There's a likelihood here, if we stumble and move below RSI 50, that we might get a big move lower on the price. So that's it. I leave you right now here with your markets trading a little bit lower. We'll see how the week goes, and let me just show you, for the sake of having a little bit of a reference point, gold is now trading down about 10-11 points, and you can see that crude oil is down about $1.18. We shall see how things go. Eric Muadid, Muadid.com. As always, I'll keep you guys posted. There's a good chance I might not be making a video tomorrow because of the volatility that we might expect tomorrow, and so no need to try and figure out where the markets are going in the face of strong volatility. Otherwise, those are the ideas. We'll see how things go. Eric Muadid, Muadid.com. Let me rush this video to you. Good luck, peace, and blessings. I am out. Oh, by the way, as I was signing off here, I noticed that this chart has very good double top rejection, and as long as AU is staying below the blue line, one can still expect lower prices. So there you have multiple reasons why this could and potentially might go lower. Peace and blessings. Once more I am out for now. Let's keep things going, see how things go. Woo!